Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 3rd, 2025, and we're diving into Macy's third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Macy's has delivered an interesting report this quarter, and I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. Macy's reported net sales of $4.7 billion, which exceeded their guidance. John, what drove this performance?
Absolutely. Macy's achieved a comparable sales growth of 2.5% on an owned basis and 3.2% on an owned plus licensed plus marketplace basis. This growth was fueled by strong performance across their nameplates, particularly Bloomingdale's, which saw an 8.8% increase in comparable sales.
And how did this impact their profitability?
Macy's reported a GAAP EPS of 4 cents and an adjusted EPS of no 9s, which is a significant beat against the forecasted EPS of -13 by analysts. This was driven by better-than-expected net sales, gross margin, and controlled SG&A expenses.
Operational efficiencies and future outlook. John, Macy's has been focusing on operational efficiencies. How have these efforts reflected in their financials?
Macy's SG&A expenses decreased by $40 million, reflecting benefits from store closures and cost containment efforts. Their gross margin was slightly down by 20 basis points to 39.4%, primarily due to tariff impacts, but still better than expected due to effective mitigation strategies.
Looking ahead, what can investors expect from Macy's?
Macy's has raised its annual guidance, expecting net sales between $21.475 billion and $21.625 billion, and adjusted EPS between 2 and 2.20 cents. This reflects their confidence in the bold new chapter strategy and their ability to adapt to market conditions.
Shareholder returns and strategic initiatives. Macy's has been active in returning value to shareholders. Can you elaborate on their recent actions?
Sure, Macy's returned $99 million to shareholders this quarter, with $49 million in dividends and $50 million in share repurchases. They have a strong balance sheet, with $2.4 billion in total debt and no significant maturities until 2030, providing them with financial flexibility.
How do these actions align with their strategic initiatives?
These actions are part of Macy's commitment to their bold new chapter strategy, which focuses on long-term growth and shareholder value. Their investments in Reimagine 125 locations and digital capabilities are key components of this strategy.
Key takeaways. In summary, Macy's has delivered a strong third quarter with impressive sales growth and profitability improvements. They've raised their guidance for the full year, reflecting confidence in their strategic direction. John, any final thoughts?
Macy's is well positioned for the holiday season with a robust strategy and financial health. Investors should keep an eye on their execution of the bold new chapter strategy as it continues to drive growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Macy's performance in the comments below.